All right, so Governor, can you hear us? I don't believe the governor can hear us. Senator Romney, maybe we start with you on, I'm not sure that we can hear you either. Are we able to hear the senator, anyone? Sorry, we're having some technical difficulties here. Let's see if we can figure this out. Gavin, can you talk? Or can we hear you?
Can you hear me?
Yeah, we can hear you. I'm not sure what's going on with the governor and Senator Romney's audio currently. Let's see if we can try to figure that out. Gavin, it might make sense if you want to kind of just set us up and give us a sense for everything that's been happening and where we're at as the governor and the senator kind of work to get their audio going.
Clint, can you hear everyone on the line, or are we having the same problem?
I can hear you, Scott. In fact, Scott, maybe we start with you and kind of how this has affected Zions Bank and how you're responding to all of this.
Okay.
And you're good to go. We can hear you now.
Okay, do you want me to start?
Yeah, let's do it.
Yeah. Well, welcome everyone. I'm Scott Anderson from Zions Bank, and it's a pleasure to be here with you today. These past few days have been stressful and highly eventful in the banking world. The failure of two large banks, Silicon Valley Bank and Signature Bank, have rattled the markets as well as many people's nerves. With the news that Silicon Valley Bank had failed, we began working with Silicon Slopes, government officials, local VCs, and others to develop a plan to help companies caught in this collapse and to have access to funds to keep their businesses open and operating. And we stand ready to work with all VCs and companies impacted by this failure to help them regroup and move on. The actions over the weekend by the Treasury Department with banking regulators to protect the depositors in these institutions appear to have contained the risks that we were facing and the concerns that took hold among depositors at these banks. The Treasury announced that all deposits, insured and non-insured, would be available today. The Federal Reserve also announced yesterday that they had established a loan fund to support bank liquidity. These actions calmed the markets and relieved the worries of many small businesses about how they would be able to meet payroll on Friday. Secretary Yellen expressed full confidence in banking regulators to take appropriate action in response to the events that are happening, and she noted that the banking system remains resilient. And bank regulators who have been monitoring the situation are confident that this failure is an idiosyncratic event and that there is no indication of systemic or liquidity issues. Now, many have asked me about Zions and how the impact of Silicon Valley Bank's failure may have impacted us. Zions differs from these failed banks in a number of very material ways, including at Zions, we've certainly grown over the past decade, but nothing close to the aggressive growth rate at which Silicon Valley Bank and Signature Bank have grown. We have a business that is geographically diversified, and it's diversified in terms of the types of clients we bank and the products we offer. Our strategy has been to focus on a large number of small and medium market businesses in a wide diversity of industries, as opposed to the narrow strategies followed by Silicon Valley Bank and Signature Bank. And our deposit base is both very granular, consisting of some 1.4 million accounts, most of which by number are fully insured, and nearly half of which by account balances are fully insured by the FDIC. We simply don't seek to build a bank with mammoth wholesale deposit accounts. A fine point on it Silicon Valley Bank's average deposit account balance was an astonishing 22 times the size of the average deposit balance at Zions, with only 5% of their accounts fully insured. And our capital and earnings and credit quality and liquidity remain in very solid shape, as reflected in our recent 10-K filing with the Securities and Exchange Commission. And we use the stress testing process and liquidity rules followed by the largest global systemically important banks to plan and prepare for industry stress. And I think it's interesting to note that over the weekend, an analyst at Bloomberg wrote, in the wake of Silicon Valley Bank and Signature Bank's swift demise, it's important to view deposits granularity, or having lower balances per deposit, as a sign of more funding stability, with Zions and Region Banks leading peers on this measure. I want everyone to know that Zions is committed to the technology, startup, and venture capital space. We've been active in the venture capital and SBIC space for nearly 30 years. We are supportive of Silicon Slopes, the Utah Entrepreneurial Challenge, and many other activities to foster innovation and starting new businesses. We re-engineered our lending policies and developed a dedicated policy for early stage tech companies, making us more competitive. We've started a dedicated tech lending group 10 months ago, headed by Sam Clark. And going forward, we are committed to continue in this space and support great local companies. And lastly, we are onboarding former Silicon Valley Bank clients and are getting accounts set up quickly and at scale. Our dedication is to Utah, and this has been the case for the last 150 years, and we will continue to have it the case going forward for the next 150 years.
Thank you, Scott. I appreciate it. Appreciate you coming on. I know this has been a crazy weekend for you and a crazy morning. I appreciate that statement. Hey, Governor, let's see if we can hear you now and get a sense for where things are at on the state level.
Thank you, Clint. Is that working?
It's working perfect. You bet.
All right. Great technology. I'm really pleased that I don't have as much to report today because of the changes that happened yesterday. But I think there's a couple things that are really important in this discussion, and especially to this audience. I want to thank everybody that's on this Zoom call for their incredible work over the weekend. It was a very intense 48 plus hours for everyone that was involved. Again, especially those whose deposits were at risk. We recognize that some of you had the worst days of your professional careers over the past couple of days. And, several weeks ago, Wallet Hub came out with their rankings of the best states to start a business. And Utah was number one on that list, with Texas and Florida coming in at 2 and 3. And I think this weekend, we really saw why Utah was number one on this list. It was impressive to me to see groups of people collaborating together, again, in a very short amount of time, working on potential solutions where if the feds didn't step up, that the state would have, and tried to find ways, again, to make sure that we're helping those who are struggling, and especially the payroll piece. That's really important to us. We knew that hundreds of businesses were impacted, and that means thousands and thousands of employees would have been impacted and could have been devastating to our state. I just want to give a special thanks to some of our team. Ryan Starks, the director of the Governor's Office of Economic Opportunity, as well as Brad Bonham, who is the entrepreneur in residence, a new position that we created specifically to work on issues like this, hopefully more positive issues and not the negative issues, but to have somebody on our team who knows what it's like to start a business, to grow a business, and to be able to make sure we're speaking the same language. I really want to thank Clint and Silicon Slopes, Gavin and your team, the LHM team, Alex Dunn, Corrine Clark, everybody who joined us over this weekend. There were lots of meetings long into the night, and I feel so lucky to live in a state where at 10 o'clock on a Saturday night, I can call two very good friends They're on this call, President Stuart Adams and Speaker Brad Wilson, and we can meet late into the night to again, with all of these people collaborating. I don't think that was happening in every state. Maybe it was, but I feel pretty confident that that doesn't happen everywhere. And then to have federal partners like Senator Romney, who was in the fight from the very beginning and really gets this stuff. And I think that's the difference. These weren't politicians trying to score political points. These were politicians trying to solve problems. And we desperately need more of that. We're not taking a victory lap or anything like this. Our job is to support you, the entrepreneurs in our state who create the jobs, who keep our economy running. Far too often we're part of the problem, but I hope this weekend we're part of the solution. So thanks to the entire ecosystem and everybody who works so closely together. Just know that we're here, we care, and we're willing to spring into action when you need us.
Thank you, Governor. Really appreciate your leadership here. I know that this has been a stressful full weekend. I think we might have a pretty good outcome here. But what I'm going to you, Senator Romney, I guess the question is, where do we go from here? What does this look at the federal level? How do we prevent this from spreading? We can't hear you. Like when you came on however you came on last time, Senator Romney, it was working. Oh, shoot. Man, technology, right? All right, we'll get your audio working here, Senator. Apologies. Randy, let's go to you, who's the former Fed vice chair of the Fed. Same question to you. How do we prevent this from spreading everywhere?
Well, I think a few things to keep in mind. This is the situation of Silicon Valley Bank and Signature Bank is really quite unusual, just given the high concentration of their customers in a single industry, very high level of very large uninsured deposits. That 90% of the deposits at Silicon Valley Bank were uninsured, compared to typically a bank has maybe half their deposits uninsured. They had few profitable lending opportunities in that industry, so they had invested large amounts of perfectly safe longer-term Treasury and mortgage-backed securities. Most banks make their money by taking credit risk. SVB made its money by taking interest rate risk, and obviously that moved against them when interest rates started to rise, but that wouldn't matter so long as they didn't have to sell those securities in the market. In other words, that bank, and really every bank in the country at the moment, is perfectly solvent. It's only because their customers, being very concentrated in a single industry that was under some liquidity pressure itself, began drawing down all their deposits at once. So they had to begin selling those securities and recognizing those losses. And then that triggered that unprecedented wave of sort of Twitter commentary that accelerated the run in a way that we simply had never seen in the modern era. And $40 billion went out of the bank in about 4 hours, which no bank could withstand. So this is really unusual. This is not indicative of any sort of general systemic problem with the banking system. And given what the Treasury and the Fed and the FDIC have now done, that panic, if you will, that system-wide pressure should be completely alleviated. So the Treasury, on the recommendation of the Fed and the FDIC, declared those two banks systemic, that they should receive a systemic risk exception. They aren't large enough to really be systemic to the financial system or the economy. But what that declaration does, that it allows the FDIC to make all of the depositors of those banks, including the very high number of uninsured depositors, whole. They can have access to, every depositor can have access to all of his deposits today. That's controversial for banks of this relatively small size and relative simplicity. Typically, what would have happened is that a larger acquirer would have come in over the weekend and acquired both banks. This administration is skeptical of bank acquisitions, and so it may have chosen this somewhat more dramatic route. I think it's a little problematic for longer term reasons, but for the immediate question of, can you get your money? All deposits will be available today because of this declaration of a systemic risk exception. The banks are being operated in receivership preparatory to sale. So as part of treating them as systemic, it should be business as usual with regard to current loan commitments, other banking arrangements. Ultimately, the answer should be for these institutions to be quickly acquired rather than wound down. But given this administration, that may take longer than it otherwise would have. And then the Federal Reserve has announced a lending facility that will value the securities of every bank at par, not at the reduced market value that has resulted from the increase in interest rates. So that will allow every bank to meet the requirements of its customers, even if they too had some balance sheet pressure from the movement in interest rates. So with these two measures, there's no reason for the customers of any other bank to have any concern about the liquidity of those institutions. There's no reason to withdraw deposits from any other bank because the Fed is essentially backing all of those deposits. And there's every reason to expect that the customers of SVB and Signature will encounter business pretty much as usual today. Won't be there will be some kinks to be worked out. But today and this week, the ability to use your deposits, the ability to draw an existing line of credit has been taken care of by the declaration that they qualify for this systemic risk exemption.
That's super valuable information. Thank you so much, Randy. Senator, let's try this. No, we can't hear you. Dang it. I'm not sure what's going on. Let's we'll try to get you a call-in link. Speaker Wilson, why don't we go to you real quick?
All right. Can you hear me okay, Clint?
Yeah, we can hear you great.
Oh, great. Well, I'll be brief. I just want to echo the comments of the governor and thank you, Clint, for pulling this together and all of his team for the work that they did, the governor's team for the work that they did over the weekend. From the state, from the legislature, I just think it's important that we convey our commitment and vested interest in the success of this industry. Great people, great leaders. The ecosystem that you've provided in our state has been impactful in ways that I don't think we can convey. We love having all your companies headquartered here, and the investments that you've made in the state, and the great jobs that you've created, and probably most importantly, how much we value your employees. And so, really grateful that things have turned out this morning in a way that we didn't necessarily think they might as this started happening over the weekend. And I just want to share with you, some of us have been through this before. The first Friday of 2010, the bank that I had my primary lending relationship with and almost all of my deposits was closed by regulators. And at that moment, I thought that I was going to lose my business, that I was not going to be able to pay my employees, that my vendors, my clients, none of them were going to be taken care of. Those weeks following that were the hardest weeks of my career. And I thought that my company had been ruined by the government. And so I understand, I think to some extent, what all of you have been going through. We're lucky to be in Utah, to have, especially you are, to have an organization like Silicon Slopes and the government that wants to help out. Quite frankly, back in 2010, it was crickets from the state at that point. So things are different now. I appreciated Randy's comments. I have a little less confidence in the Fed at times. I think they look silly at best right now in terms of allowing this to happen, but I'm really glad that they stepped up and have come in and tried to make this better for everyone. There are, I think, a lot of lessons that we can learn as a state, and we will try to keep our eye on things like this a little bit more so that we're ready. We do have tools at our disposal, as the governor mentioned. And I will just tell you personally, one of the lessons that I learned from that time is less flashy is better. And the diversification of my company's assets changed significantly after that period of time. And I also had a rule that I created for myself.
Recording stopped.
I'm not going to have any kind of banking relationship with anyone with a bank that I don't have the cell phone number of the CEO or president, and they won't take my call. And that served me well. But As the governor said, we've got the best economy in the country here in Utah, the best state for businesses, and we want to do everything we can to help support your industry to see it grow and prosper. And cautiously optimistic this is all going to work out really, really well. So thank you for all that you do, and know that as lawmakers, we're here to help in any way that we can.
Thank you so much, Speaker. Senator, let's try you again. Oh, dang it. We still can't hear. I have no clue why. Senator, we will try to figure this out. I promise. President Adams, let's go to you here.
Yes, can you hear me?
Yeah.
There we go. I wanted to make sure. I would echo what we've heard here. It's great to be in Utah. The governor, the speaker, myself, we have different ideas, but we are unified, totally unified in making Utah the best spot for business. You see, when things get tough, things got tough over the weekend, what we did is we went to work. And not only did we go to work, but all of you went to work, everybody on this call, trying to figure out how you can make your businesses to succeed. We experienced the pandemic a few years ago, and many of us remember very well that experience. Utah, when you look at all 50 states, you look at three metrics.
Recording in progress.
The economic metric, the case fatality metric. Ours was 0.00495, one of the lowest in the country. The education metric, all three combined, Utah came out number one. We've heard that we've had the best economy in the nation. We have great regulatory policies, but I'm going to spend just a second on something else for fastest growing state. Much of that is because of the great work you do, the industry we have, Silicon Slopes, Clint. Thank you for all your great work. Scott Anderson, Zions Bank, we have the infrastructure. But I'm going to talk for just a moment about the state. When I was elected as a representative, we bonded for our buildings. And we decided we might think we wanted to do something besides bond. We wanted to be conservative. So we quit bonding, and eventually we started paying cash for our buildings. We thought that was a really good thing to pay cash. And then we actually started doing something else. We started putting ongoing revenue aside, allocating ongoing revenue for infrastructure, for roads, buildings, and other things. That gave us the ability to be able to, when the economy, and occasionally, like we're seeing now, the economy contracts, we're actually able to use that ongoing money to pay for salaries and do other things. Right now, the state of Utah, it's on a $28 billion budget. We have $1.5 billion of, we're not borrowing, we're not paying cash. We have ongoing revenue set aside to do these infrastructure projects, which means that if the economy contracts a little bit, we can quit building those infrastructure projects and use that $1.5 billion to actually sustain our state services. I believe Utah is a safe haven for business, for your businesses, not only because of our tax and regulatory policy, but because of the way we manage our budget. We're not a startup. We're a great spot to do business. And I just want to say thank you. Thank you for choosing Utah. We hope we can be worthy of your presence here. We hope we're good partners. And Governor, great job over the weekend. Again, everyone involved. I'm just happy to be part of this team. So thank you.
President Adams, thanks you so much. Senator, I have a good feeling this time, Senator Romney.
I don't have your faith.
Well, we got you. We can hear you.
You got to be kidding me.
No, we can hear you.
Okay.
Apologies for all the technical difficulties, Senator. Let me just set you up real quick here. How are you feeling about this from a federal perspective over the weekend, and how do we ensure like something like this doesn't happen again, or we keep the economy strong?
Well, I found it very helpful to listen to the participants so far. Let me just note that it's rare that the Oscars get it right, but this is one more case of everything, everyone, all at once. This is a lot of stuff that happened at the same time. The people in Silicon Slopes and across our state had a big impact on the Fed and the FDIC and the administration making the right decision. And I say that because Liz Johnson, my chief of staff, got calls from you. Mandy Grant, my head of the office in Salt Lake, did. Matt Waldrop, my former chief of staff, also got calls. I got a call from everyone from Ryan Smith on one side to the owner of a business with a handful of employees on the other, all very, very concerned. I took those things to the White House. I was in contact with the White House over the weekend several times, also with members of the banking committees, including my Democrat friends on those committees. I was very concerned as of Sunday morning when Secretary Yellen said there'd be no bailout for the bank. I now know what she was trying to do, but I was very concerned about that. Raised the alarm with the White House. I think they have. I think they did take, by the way, in the final analysis, the right step. I agree with Randy Quarles in that regard. I was briefed again last night by the FDIC and the Federal Reserve, and it's very clear that both are anxious and willing to take whatever steps are necessary to make sure that people realize that their deposits in a federally regulated bank are not going to get lost, that they are fully covered. Now, I would note that this is going to be politicized. Anytime anything happens in our country, the politicians jump in and try and blame the other side. I frankly think that's a bit sick at a time like this when people are very nervous. Without making any effort to politicize, I'd note that this is caused in part by inflation and then interest rates being raised to counter inflation. The accounting rules at our banks are a little unusual, and that the banks don't have to mark to market their federal securities if they plan on holding them to maturity. That led the risk from being fully understood by people who were looking at it. I think it's fair to say that either the regulations or the regulators didn't provide the warning that was necessary. But I would note that a run on a bank is possible as long as there was a run on toilet paper, for instance, at the beginning of COVID. It made no sense. But, with social media out there, you can start a run on something and do something which is irrational but real. And I believe that the Fed took the right steps, and the FDIC did, the administration did. I know you want to know what's going to happen from here. And I can tell you confidently, we will return to stability. I just can't tell you when. Right? I don't know how long the panic will persist, how long people will sell stocks and move cash around. People act in ways that are rational and irrational. But I'm confident that we'll return to stability. And I guess I can say I just don't think we need to worry about the stability of our banking system or the stability of our the companies and individuals who have their deposits in federally regulated banks. So I'm appreciative of the work that's been done, the work at the state level, the federal level, and hope we can get this behind us and get back to business.
Thank you, Senator. Apologies again for the technical difficulties. I'm so glad that you were able to pipe in here. I'm not sure Senator Romney or Randy, there's a question here that I think is an interesting one. I'm going to put it up on the screen for people. It's from Art Raymond from the Deseret News. He's asking, how big a role did the speed of electronic banking alongside the virality of social media communications play in the SVB meltdown? Are banking regulatory functions simply too far behind current tools to apply in a meaningful and effective manner? You kind of touched on that, Senator Romney, but I wonder, Senator or Randy or both, if you could take that one.
Go ahead, Randy.
Well, I do think that the role of social media in sort of amplifying and accelerating the run is something that the regulatory system, the Federal Reserve, the other regulators have not really taken into account of how just the dynamic around a bank that's under pressure has changed currently. Never seen anything like that before. Never seen $40 billion leave a bank of any size, let alone a bank of that size before in a few hours. So that's something that they will have to reflect on going forward. I think that this really wasn't a problem of regulation. I don't quite know how you address that. I wouldn't want to be recommending that the bank regulators should start taking on what some of the other government officials have been doing over the last few years and trying to tell Twitter what's misinformation and what's not. But it's clear that sort of the the panic being spread on Twitter was a significant contributor to what happened here, as opposed to, as Senator Romney said, in Washington right now, there's a lot of discussion about, well, this was a regulatory failing, this was a supervisory failing. It really was driven by a plain old-fashioned panic, which could happen to any bank, and using modern social media tools that we really haven't taken into account before.
Yeah, I appreciate that, Randy. You're the expert here, and I would just note that we're going to have plenty of time to dissect what happened here. I don't have that full analysis at this stage. I mean, we know fundamentally what the cause was, but what leads to these kind of panic rushes is hard to assess at this stage, and that's going to be done over the coming months. But I think the key thing is that the Fed and the FDIC and the administration have taken the necessary steps to calm the waters, and they will eventually get calmed.
We have Senator Lee on the line. I'd love to give you a chance to weigh in here, Senator.
Sure. Thanks for letting me join you. I don't have much to add other than to say that I'm glad that those with deposits at these institutions will have access to their cash. That is a good thing. Could have caused all kinds of additional issues. I do look forward to hearing what the plan is by the regulators moving forward to make sure things like this don't happen in the future, both because of the speed with which transactions can take place these days, in addition to the somewhat unique circumstances we have where some banks may have engaged in the same type of investing strategy that SVB did. But it's a big relief today, including for a lot of Utah's tech sector.
I appreciate you hopping on, Senator. It means a lot. We also have the head of the Utah Banking Association, Howard Headley, here. Howard, I'd love to give you a chance to weigh in.
Clint, I want to thank you for pulling this together in such short notice. And again, I acknowledge everyone who has worked so hard over the weekend to come up with solutions for business owners that are really in a tough spot, right? These are early stage, some in many cases, folks that are right on the razor's edge, as just trying to make great things happen. They don't need that banking relationship to be, this complex. So, and a tip of the hat, Silicon Valley Bank was a phenomenal bank, and it was in good shape. I think what it reminds us all, if capital is king, then confidence is queen. And I think the queen, in many cases, runs the show, what we're finding out. And what the Fed is doing is really just trying to say, listen, the banking industry is incredibly strong right now. I mean, we're in really good shape. But what we can't have is, these runs. Nobody can withstand a run. We're just not set up for that. And that's why I was so disappointed to see the reaction Thursday. What Silicon Valley Bank was doing, had a plan to raise capital. These guys were not out on the edge doing crazy things. And these political narratives really do need to stop. And they had a plan. And frankly, I talked to the folks at Piper Sandler who were working that plan, and it was a reasonable plan until, somebody decided to pull all their money out of the bank. And these guys are smart. They know better than this. And they killed their bank. They killed a bank that really served their industry well. And we need to learn from that. And I think what we need to learn is that a bank is not this monolith. A bank is a community. It's made up of the people who put the money in to start it, the shareholders. It's made up of the management team that makes really tough decisions in these challenging economic times with rising interest rates. It's not an easy job. It's made up of the depositors who put their money in the bank. It's made up of the borrowers. And we saw during the crisis 10 years ago, it was a borrower-driven crisis, right? When you get involved with a bank, and many of you are going to start looking at what your next banking relationship is going to be, and the Speaker Wilson talked about having the phone number of the CEO. I mean, that's great. You do want to know the management. You want to have access and to those things, but you need to think about who the other depositors are, apparently. Because if those depositors decide to pick up the phone and pull out billions of dollars in a couple of hours, it's going to be a problem. Who are the other borrowers at the bank? Is the bank concentrated in certain type of borrowers? So a bank is a community. And when you choose a bank, and many of you are going to be doing that in the next few days, you need to think about that whole picture, because it's not just this monolith that political sides can point at and point fingers and criticize. What we've learned in the last few days is very troubling in some ways, very enlightening, and I just hope we learn the right lessons from what just happened. But the folks that made the phone calls and said, get your money out, and they killed the bank, and a bank that served the industry really, really well. And I'm not pleased by that. There are a lot of other banks. Utah is the 6th largest banking state in the country. And it's because we have phenomenal bankers, like some on the call here, who make really prudent decisions over time. But we also have great borrowers. We also have great depositors who understand how this all works. And now we're the 6th largest banking state in the country. So you're in a great place. You got lots of choices. You got a great ecosystem here with Clint and Silicon Slopes. So we're poised to have tremendous success. And I mean, to end it on a little bit of a light note, because I know I've been a little heavy here. That was the worst selection Sunday of my life. And I'm just hopeful that in a couple hours here, I can get to looking at my brackets and getting my brackets pulled together. But can you believe the timing of this? And it, like I said, everything all at once. What a day, what a couple hours. But really encouraged. I want to tip the hat to GOEO, the governor's office, and the quick reactions. We were ready to step in and serve this community and keep these early stage tech companies that are really the heartbeat of our system, our economy here functioning. And so tip of the hat to everybody engaged over the weekend, and let's learn the lessons that we need to learn and move forward in strength. Thank you, Clint.
You bet, Howard. Thank you so much. I think that everything you just said is super interesting. I also want to give a tip of the hat to Scott Anderson and Zions Bank. I know that they were making preparations as well in case the feds did not step in for this community, which was really great. Gavin, I'm going to go to you. Gavin's the managing director of Kickstart Fund, the first seed fund in the state of Utah. I'd like you to respond to Howard's what Howard just said, and two, Ben Winslow from Fox 13 News asks this question, and I think you're probably the best to answer it. Do we have a sense of how many Silicon Slopes firms would have been impacted, and what were the state's plans to step in if the feds fail? Well, I guess maybe you're the best for the first part of that question. How many Silicon Slopes firms would have been impacted?
I think it's fair to say, and thanks, by the way, for having us on and for having this conversation. I also want to say thanks to this community. It was tremendous to get the government support, the private sector support, the financial sector. There was a plan that we were going to try to announce during this meeting to kind of give hope to entrepreneurs who, it's really hard to have a startup be successful. There's so many ways to fail. Many people on this call know that. And then when you can't have access to your own money, and entrepreneurs have faced some pretty unprecedented problems and challenges, exogenous, over the last few years. And this was just kind of one more. And so I just want to, on behalf of this community, just say thanks. We're not through it. There's some challenges ahead, but boy, does it look so much better. To answer your question, Clint, it was all of the startups who are always vulnerable to exogenous shocks. I would say about half banked with SVB, and about half of those assets, again, were stuck, including my firm, right? So we banked with SVB. There was dozens of entrepreneurs that were looking at funding payroll out of their own bank accounts if they weren't stuck, not taking payroll, laying off. And this is why the message, and it was well received by our politicians, was like every hour matters, because these entrepreneurs are saying, how much of my company can I save? that was where we were. And it was starting to, contagion was creeping in. Again, so glad that the message was heard, but I think it took a while. And this is where I think this community really rallied and told that over social media, calls, emails, texts. It really mattered, especially in a place like Utah where we were pretty aligned. And I think that mattered. I'm part of a national organization for venture capital. And I think a red state that has, that really understands business and has senators and national players who get this, that really mattered in this conversation. So I'm proud of the role that Utah played in this. But it was all, Clint, the answer is all, and then directly at least half. And so we were headed for hundreds of companies, thousands of jobs imperiled day by day this week. It was going to be one to remember. And I know there's still a lot of FUD out there. And I would just say, hey, we've been trying to calm as much as we can, and I think we can feel that way now. There's a backstop here. There's a plan. It's going to be fine. So that's what I would say.
Thanks, Gavin. Real quick, we're getting so many of this one question, Senator Romney and Senator Lee, directed to you, and in particularly, but maybe not directly to you guys, but to the federal government. I'll read one of them here. I would like to ask Senator Romney and Senator Lee, what actions are the feds considering with regard to the bonuses that were paid to Silicon Valley Bank employees and executives hours before the FDIC takeover and shutdown? What will be done to help mitigate some of those damages? I don't mean to put either of you on the spot here. That is just the biggest question that's coming in.
Well, I can tell you that that's not one topic that we've been briefed on yet. The FDIC will have the capacity to look into any transactions that front ran the collapse of the bank, and that will include, I'm sure, returning compensation, as well as, I mean, there may well have been executives of the bank that withdrew their funds, withdrew accounts from the bank, and those things will all have to be remediated, and I would presume that will occur. I would note that I think we have to also indicate that we don't know of wrongdoing at this point. It's possible there has been. If there has been, why there should be action taken to reverse that. But I think, as Randy Quarles indicated, and Howard Headley as well, this was not a bank that was doing crazy stuff. They invested in U.S. Treasuries. All right, their reserves were U.S. Treasuries. And their problem was that the interest rate rise was so rapid, actually an historic increase in interest rates at a very high level, an inversion of the yield curve, such that these securities suddenly were not worth what they said they were worth on paper. I mean, and those are U.S. government bonds. So this is what happened. And then, of course, it was a sense of panic. People put on social media, said, hey, get your money out. All these things came together. So I wouldn't assume from the outset that somehow there were some bad actors here, people that need to be punished. Let's learn from the process, see what went wrong, make adjustments. I mean, I have my own hypotheses. I think one of the questions is, I don't know that depositors in a bank should have to worry that they can't get their deposits back. Anybody with under $250,000 doesn't worry about it. Well, why do we say that people with larger amounts need to worry about it? I mean, should there be an insurance fee charged for all accounts that covers account? I mean, these are questions that I think we're going to have to sort through. But if there were some bad actors that did bad stuff, hey, that's got to be punished. But the politics and the punishments, let's put that aside for now and try and figure out how we make sure that we can support the businesses in Utah and across the country that are facing challenging times, and make sure that they're successful and add employment rather, and succeed.
Thank you, Senator. Senator Lee, I don't know if you want to chime in there or let Romney's statement stand. Go ahead.
Yeah, we don't know anything about that. They haven't told us anything. I have no idea what they're contemplating.
Randy, do you have anything to add there? Like I said, for some reason, this is the biggest question that keeps coming in.
I'm just completely supportive of sort of the very balanced approach in Senator Romney's comments. This was not a misbehaving bank. It was a bank that took interest rate risk, that moved against it, and remained solvent during that period. Indeed, if the Fed's facility that they announced last night had been available Thursday evening, the bank would not have failed because its assets will cover its liabilities. They just won't cover them if they have to be sold today, all of them. So, so I think it's a little early to say. There may have been some misbehavior. If there is, the Feds will get to the bottom of it. But it's a little early to say that because this bank failed, there must have been misbehavior and the executives' payments must have been unwarranted.
We had the CFO of Larry H. Miller Companies, Ian McDonald, with us. Would love to get your take on all this from a business perspective.
Yeah, appreciate it, Clint. Thanks for setting this up. Thanks to Zions and everybody else who's put this together. A lot of response, a lot of people wanting to make sure that entrepreneurs in our community know that we support you, that we stand by you, that we need you to keep taking risks. We need this startup and venture ecosystem to continue. We greatly appreciate all of those on this call and the discussions that have taken place over the last few days to make sure that we can land in a safer spot today. And while there's still a lot unknown and where this may go, we're thankful that the discussions will continue and that we will hopefully navigate and land at a better spot. You know, if there's those on this call, as I've looked at the questions that are out there that are in startups, that are, you know, thinking about taking that next risk or that next investment, we hope that just by us getting together and being on this call is at least some small semblance that we support you and we stand by you and we need you to keep taking that risk. So thank you.
Thanks, Ian. Commissioner Root, I'd love to go to you. We're still getting the question on what the state's plans would be had the Fed not intervened. Are there options still on the table? I think you're the person from the state here that might be able to best answer that.
Sure. Thank you, Clint. Well, first of all, thanks to the FDIC and the Federal Reserve for taking the actions they did to help slow down, you know, the deposit outflows and the panic that we saw on Thursday and Friday. The banks in Utah are well capitalized. They have plenty of liquidity. They're not concentrated in any particular industry for the most part, and in normal conditions are going to be very profitable and very successful. But as you've heard from Senator Romney, from Randy Quarles, these things were unprecedented that occurred Thursday night and Friday. And, you know, the actions that had to be taken by those state regulators in California and New York were, you know, it's a sad scenario when you lose a bank at any time. But thankfully, the FDIC and the Fed has stepped in, allowed people to reevaluate their risk, look at how they do business, and there will be a change in the way banks operate in the future because this was new and unprecedented, and we'll have to absorb the new, first of all, the programs that the Fed and the FDIC have put in place, how that affects the banks here locally and across the country. And I'm sure there'll be a lot more emphasis on uninsured depositors and on concentration of risk in certain industries. But, you know, the U.S. is very resilient. Utah is very resilient. We will rally around our banks. We rally around our industries, and we will put policies and procedures in place to look at these risks. Banks are in a business of risk. That's why they earn money. And the companies that they serve are also taking on risks. So they'll have to reevaluate how they do their business. And hopefully we can all work together and come up with a reasonable risk level that keeps the public satisfied. And the deposit insurance is there, you know, to build confidence in the system and let people take reasonable risks. And we'll move forward and hopefully get past this and get better.
Thank you, Commissioner. We also have the chair of the Governor's Office of Economic Opportunity, Corrine Clark. I wonder if you'd want to weigh in there on kind of discussions that were happening within that office. I know the director, Ryan Starks, was involved as well.
Thank you, Clint, and thank you everyone who's been paying attention and also helping So you're right, Ryan Starks, who works for the governor. We have a board that has Brad Bonham as one of the board members. He's the entrepreneur in residence. They were organized very quickly to say, all right, can we cobble together some funding that we can backstop some of the challenges to make sure that at least we get through the next week or two. There is a fund that Ryan Starks is responsible for. It's the Industrial Assistance Fund, and it's for emergencies. We used it last year for some drought problems with some farmers who were struggling. And so we got together and with a lot of the family offices, as well as the banks that are on this call, said, all right, if we had to, could we put together money to make sure that we took care of these companies? And Speaker Wilson, these are for companies that don't have the bank's chairman's cell phone number. These are smaller startups that have very tight finances and that they got to make sure that they make payroll. So we were organized, ready to go. And I have to say, I was really impressed with the family offices that stepped up and said, look, we can be part of this. We don't want to lose our principle, but we do believe that there will be solutions that the government helps us with. So thankfully, we didn't have to pull the trigger on that. Of course, Zions Bank was a big part of that, as well as some other companies that were willing to step up and say, look, we could administer this. So really proud to be the chairman of that group, but truthfully, I didn't do anything but sit there and watch these smart people get organized and say, how can we help?
I want to be respectful of everyone's time. We also have a lot of startups, entrepreneurs on the call. Ben, I'd like to go to you from Peterson Partners, the managing partner there. What advice do you have for these entrepreneurs and these startups now that it's Monday morning and we've landed where we've landed?
Yeah, thanks, Clint, for having us on. I think and for organizing this. It's been a stressful couple of days. I think for all of us involved, and especially for those who have been trying to think about how they're going to get cash, access that cash to make payroll and do all the things that are necessary. I think there are a couple of important lessons learned here. I would say, and I think Howard's comments were really good in the sense that this feels a little bit like an own goal here by the venture capital community, because I think this interesting circumstance where we have a highly connected group of investors who is talking regularly, which can serve to be a really good thing. But in this case, I think created some challenges where we had this herd mentality at a very difficult time when a bank was kind of in trouble, and unfortunately led to the collapse of SVB, which I think is going to ultimately be challenging for the Utah community. Banks will clearly step up and help out, and we've got a lot of banks here, but this is unfortunate. I think SVB's played a great role here with our community, venture community in general, but across the board. And we've got lots of other banks which are included here, which are set up to help, and I think that's great. But this is an interesting thing for us to think about. And in terms of lessons learned, a couple of things that we're sharing. I think one is the structure of these with SVB was, in a lot of venture debt providers, is to get debt. And with that debt, you commit to have all of your deposits with that institution. And in fact, if you move that capital, you are breaking covenants. And so a lot of companies found themselves in this really difficult catch-22 on Thursday and Friday, saying, I have covenants. If I move this capital, I break those covenants. And then what happens? And that's a tough spot. And then second is, we looked at the assets for SVB, 210 billion of assets, 170 billion of deposits. And it looked like, hey, there's a path here for people to get money back, even in this really challenging circumstance. But all of a sudden, liquidity became a huge issue. What do we do on Monday? Even if we get our money back, when does it come? How quickly are we going to get it? So I think I'm hoping that one of the lessons here is that we can create a situation where companies that do get venture debt also can have, it feels like the norm needs to be, we have money at multiple banks, and we've got enough money in other banks that we can cover multiple months of burn, multiple months of operations. And so I'm hoping that these venture debt providers will find a way to underwrite that doesn't require you to put all of your capital in one bank and not give you the flexibility. So I think that's one. And we're encouraging our founders, have capital in multiple banks, have enough capital that you can cover months of payroll, so that if we find ourselves in this situation again, you're covered yourself. I think second is, really hope that, I think really helpful and glad that the Fed stepped in when they did, because we're already seeing First Republic Bank is down 50% today. Other banks are down. And what we were hearing over the weekend was a continuation of what we had seen, which is all these people had already scheduled withdrawals to come out of these banks on Monday morning. And it was the potential for this to happen again was clearly there. So I think this has been mentioned, but would have given this situation of SVB, 210 billion of assets, 170 billion of deposits, would have been great to step in a little bit earlier and say, hey, this is going to be okay. We don't need to move as quickly as people are moving. So if I were to summarize, I think one is would love to have the opportunity for our companies to continue to get access to venture debt, really important to the way these companies operate, but have the ability to have capital at other banks and not have it tied to one single institution. I think that creates unnecessary risk for all these businesses. And then two, just being aware of of the financial health and when possible, be great if we could move a little quicker, which I know is hard in these situations. So we're hopeful that First Republic Bank finds its way out of this, because these banks are really critical. But lesson learned. Let's have capital at more than one bank going forward, and I think that's one of the main lessons here.
Thanks so much. I want to thank everyone, and just to conclude this particular town hall, this was put together so quickly, and look how incredible it is that all of Utah's top leaders were willing to jump on here. In particular, I want to thank Governor Cox, Senator Romney, Senator Lee, Randy Quarles, Zions Bank's CEO Scott Anderson, President Adams, and Speaker Wilson. Thank you all so much for coming on here. I'm not sure that there's a state where something like this would happen this soon after what just happened, and I think that's indicative and a good look for the state of Utah. If Silicon Slopes needs to do more of these, we will. For those watching, if we don't, man, it'd be great to just keep doing what we're doing, right, and keep plugging away. So thank you all so much for coming on, and we'll do it again if we have to. Appreciate it.